Okay, so we are going to hold the thought on Nick's word on that one, and we'll come back to it on what it seems like to becoming a more lifestyle choice for the end users and a pragmatic approach for the investors. So we are going to hold that thought and come back to it. Uh, Moving on, Jules, Southeast Asian market has been uh, visible, but equally secretive. It's much like the cultural aspect. They're very quiet. There are a lot of news items about UK, US. We do so many events. We have so much news on all of these areas, and very few professionals in India or very few people are very massively aware of the Southeast Asian markets. Of course, and especially the real estate aspect of it. I know that Mark and me have been discussing about the phenomenal opportunities available in Vietnam recently, and Mark's done a couple of panels as well talking about Vietnam and what opportunity it brings. But I'm really curious to understand from you, to give us like an overall view on what are the markets that you can talk about, and what are the kind of opportunities available in these Southeast Asian markets.
Okay, Mani, yeah, great. I mean, as you say, traditionally, it's not, this part of the world has not been a prime focus for Indian property investors. But countries such as Singapore, obviously well known, Malaysia, Thailand, and as you mentioned, Vietnam now are really offering quite a lot of very interesting opportunities and for returns on investment and for lifestyle, as being mentioned in the UK. And I think there's a stronger focus on this part of the world in the last couple of years. Particularly because the interest from China was so strong until the COVID situation happened, which actually gave the market a big boost in terms of investment and also raised the profile a lot of the properties and developers over here. PropertyGuru attracts 24.5 million property seekers monthly across our 5 markets, from Singapore up to Vietnam, which shows the demand's pretty strong. The HQ is in Singapore. Obviously, Lion City is still very appealing to international visitors and investors alike from a business perspective as well as an investment perspective. But the government is very cautious and very careful to control investment in Singapore. So it's not always the easiest place to invest for an international investor without necessary advice and guidance. For example, the Singapore Land Authority basically prohibits landed properties to be bought by foreigners, but the condominium units, strata landed houses, leasehold land for no more than 7 years, executive condominiums, all possibilities. And to be honest, the land bank management that Singapore puts in place means that the market grows steadily every year in a very controlled manner. So it's a guaranteed investment if you are able to buy a property here. And obviously some of the designs and the new properties that are going up in Singapore are among the best in the world in terms of design, facilities, sustainability, etc. So Singapore still remains a very appealing market, especially I would say at the high end, the luxury end. Malaysia, a little more accessible to foreign buyers, but very little known, actually has some very solid policies that attract international investors. They launched back in 2008 a second home program that involved tax breaks and visa accessibility for foreigners to stay long term. That's now been put on hold while they review it, and they're actually Malaysia is trying to compete in many ways with other countries in the region by making it one of the most easy countries in Southeast Asia to invest. So we're looking forward to the beginning of next year in the post-COVID environment, seeing some very attractive offers and very affordable quality properties available in places like KL and Penang, which are increasingly attracting foreign interest. And then, of course, Thailand has long been a favorite for international tourists and travelers, and that's brought with it also plenty of international property investors over the years. Probably for the last 30 years now, it has been a major investment destination, and also for many investors from India. You talk about lifestyle, you talk about the options available to investors in Thailand. It's a vast and varied smorgasbord of property options, from Bangkok, which is a major gateway city and very cosmopolitan these days, to the places like Phuket, where you can buy very high-end luxury villas right on the coast for a fraction of the price you would pay in Southern Europe or in other parts of the world like the US. So Thailand, again, there are certain restrictions in place. The Condominium Act means that foreign ownership of a building can only be 49%. but these are pretty easily navigated, and the developers themselves target international investors to take up the quota of international property allowances across the board, which means it's actually quite simple to invest in Thailand. And our recent property index in Thailand, actually, which we run on a quarterly basis, actually showed 2% increase in the price index in Bangkok, which is actually the first time that's happened since early 2019. So the signs of a bounce back in the Thai market are very strong as we move forward into next year, especially considering how well Thailand has managed the COVID situation, in that basically life goes on as normal in Bangkok. And there's very, very low cases in Bangkok for the last maybe 3 months. So it's a safe destination and a very appealing one, relatively affordable and easy to invest. And then finally, as you mentioned, Mona, Vietnam, I mean, it's the newcomer, it's the exciting opportunity, it's the very high performance economy that continues to drive forward. Again, they've done a very good job at managing the COVID situation. The property market was opened up to investors with 50-year leasehold back in 2015. It's potentially going to get much easier for foreigners to buy. There are certain restrictions, like 30% of units in a condominium, no more than 10% of properties in a landed development. But home prices are still considered very affordable, as much as 75% cheaper than in places like Singapore, which is, an hour and a half flight away. So Vietnam, Ho Chi Minh City and Hanoi really representing very good value and great opportunity in terms of growth and return on investment for international investors. So you asked me to pick a market to look at, and I would say Vietnam, as you mentioned earlier, would be the one to watch as we move into 2021. So a lot of choice and a lot of strong opportunities around the Southeast Asia region.
Jules, back to you. Just as US becomes a very important, and UK too now is really picking up from the whole immigration aspect. Malaysia, my second home program, which is such a beautiful, simple, easy program, has really lacked representation in India. I just wanted to, understand a bit about how things work there, because, when Krypton started selling the Star Ascot project in Kuala Lumpur, and, we are now on the verge of figuring out something for TRX happening, the TRX, which has just been launched by the Greenland Group in Kuala Lumpur. It was only then that we kind of understood how it ties up with the Malaysia, my second home program, and how easy it is for somebody from India to utilize that program. Um, my assumption is that perhaps the markets like Malaysia, Thailand, Vietnam, Singapore haven't really approached India as a marketing destination, because there's enough and more real estate happening there from other parts of the world. Am I correct in presuming that? That is my
Yeah,
presumption.
no, I think you probably are. I think what's happened was twofold, really. Is there was the first round of sort of international investment into this Southeast Asia, including Malaysia, Thailand, was very, very much from the West, from the UK, from Europe, from Germany, particularly in places like Thailand, and came along with the tourism boom. But then what happened was the economies grew at pace, and then there was very high domestic demand. So I guess the focus then switched back to domestic, and a lot of the property development went on, and a lot of the purchasing and a lot of the growth from markets was driven by the local market. So I think there's a kind of fragmented approach to marketing these destinations to international investors, and it tends to have been interrupted by the domestic success, which again, I think, is the same could be said of Vietnam. Vietnam's a booming domestically, but now suddenly eyes are turning overseas, and there's more interest from places like India in places like Vietnam now than there ever has been. So I think you're right. I think perhaps they hadn't pushed it as hard as they might, but given the current situation and the fact that everything is facing a slowdown after COVID, I think international investment destinations will be prime target, and Malaysia is very much an unsung hero in that respect in terms of the ease of investment. Yeah, you're right. Yeah. Yeah.
So, Jules, once again, coming back, TRX was a project that has been in the news for many, many years.
Mm.
Lots of things went wrong with it before things started to go right. And now it's one of the most sought after and the most, popular new launch that is happening in KL in recent times. So, what happens in a project like that, which has obviously been in an incubation space for a very long time? Uh, does it still make sense for an investor to go into something like that, which is a beautiful product, great mix of retail, commercial, residential, but it's taken its own sweet time to come to fruition? So, what
Yeah.
are your two bits on that?
Well, again, I think the advantage of that is that you can actually do your research into what, when something, rather than buying something off plan or going with the market, given that it's growing very fast and throwing in your investment caution to the wind. When you actually do look at something that's taken a long time to develop, has been through some difficult periods, and all that is very public, then you're actually given more opportunity to make a strategic investment. So I would say, in some cases, it's, when these things come to fruition, and they are available, and the news around them is then positive, it gives you a better opportunity to assess than maybe getting in too early. So yeah, not necessarily a bad thing at all. But yeah, I think there's a lot more transparency now, and through property portals like ours, where you can actually dig deeper without being anywhere close to the country, and get the full story on these projects and properties, and what the risks might be. So yeah.
And the next question, Jules, is for you. Uh, what is there a concept of pre-leased investments in any market in Southeast Asia? If there is, then what kind of returns? What are the average returns on a pre-leased asset uh, in Southeast Asian markets?
Yeah, I mean, well, the leased assets are one option to overcome. I mean, there's leasing options in many of the countries now that overcome the land ownership challenges that you have in places like Thailand, where you can basically opt for a leased option and a renewal. And there's constant reviews and changes on the way that you can approach these assets. And again, I mean, the returns are pretty much the same as if you were purchasing landed property. So I mean, it moves with the market really. But I think the problem with Southeast Asia in many cases is that you have to be on top of the changes on an annual basis, because there are so many reviews and additions. And in recent years, it's become easier across the board, pretty much for foreigners to invest either through leasehold or through landed property. So yeah, I mean, the return on investment angle will also depend on the demand of the year in question, and if you're flipping your assets to other foreigners, or back into the domestic market. So it really is. It's not a number you can pinpoint in a specific country at a specific time, but there are definitely returns to be made. Yes, yes.
Okay, let me break it down for you. So I think what the gentleman is trying to ask is like how in UK we have the concept of like a student's accommodation. So this is basically
Yeah,
purpose-built accommodation where when you buy a particular apartment, the developer is guaranteeing rental returns of say 7% for the
yeah.
next 3 years. In India, you have pre-leased commercial assets, which simply means that somebody owns an asset which is leased out to a multinational company or a bank for the next 5 years or 10 years. And they know that, there's an assured lease of say between 4 to 6 or 6 to 8% coming in.
Yeah,
I know Thailand has a lot of these options,
yeah. Mm.
condominiums in Pattaya and Phuket, with villas offering guaranteed rentals.
Offering to guarantee returns. Yeah, yeah, yeah. No, yeah. I mean, it's pretty much standard in the resort property market, not so much, I would say, in the cities. But yeah, those sort of, you can get 4, 5%, 6% even guaranteed return on your investment through some of the property developers. But I would say that this has actually become less of a less popular approach from the developer side in recent years, because well, apart from anything, I think the term of the lease and the length of investment that they're looking for has changed over the years, and there's much more of an investment lifestyle, permanent retirement, long stay approach happening, and there's been a lot more focus on that kind of investment in the resort areas, with the growth of developments that are really aiming at people looking for a retirement property, as opposed to something that they were, they were really looking as a pure investment. And apart from, say, hotel managed properties, which have gone in the other direction now, where you can actually invest in a hotel managed property and see a return on your property as a hotel room. But again, this has all been frozen somewhat by the COVID situation, where tourism has ground to a halt. But we'll see if that returns as one of the options in places like Thailand, when things get moving again.